The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Joining us now to discuss the crypto markets is Bob Iaccino. He's Path Trading Partners co-founder and chief market strategist. Welcome back, Bob.
Good to see you guys.
Good seeing you. So, of course, we had this sell-off overnight in crypto as Mazars is basically stepping back from auditing these crypto firms, Binance included. So, longer term, I mean, what does this all really mean? We had Crypto Quanon just now saying that, in fact, the Mazars audit was fine, but that I guess the company itself, the auditing firm, doesn't particularly want to stand by it or doesn't want to advertise it. What's the long-term effect here on the market?
Well, Lawrence, I don't think it's has much long-term effect at all. So, I mean, I'm overall a crypto bull, specifically Bitcoin. That's really what I follow. I don't follow many of the altcoins. And the reason I say that these things are not negatives is because I believe they're good. They're positives long-term. Believe it or not, the short-term effect notwithstanding, we have basically a long-term downsloping trend in crypto that has flattened out. And that's a positive sign. It's very much like, well, we'll take the example of weather. If there's a hurricane where you have 120 mile an hour winds that have now gone down to 80 miles an hour, yeah, it's bad, but it's still a positive. And we have that trend flattening out now. From an overall perspective, you need to wipe these things out. For people that aren't familiar with crypto, which, again, I have a 20-plus year career in traditional markets, there are times in our parlance at Path Trading Partners where things are uninvestable, but they're tradable. Right now for us, Bitcoin is uninvestable, and that's not a negative on the space. That's just a short-term reality that there's pressures that we can't really assess, and therefore we can't assess risk. Long-term, crypto generally, Bitcoin specifically, in my opinion, is the most investable space. The only thing that's even close for me is gold. And I mean physical gold, not gold futures and not gold ETFs. I mean gold that you can hold in your hand. So from our perspective, when we see these kinds of things happen, you're taking out question marks. If Mazars had questions about their own auditing procedures, then I don't want their audit report. And that's the way that I take that little piece of news. And I read that story by Brandy Getz and Helene Braun, and this first thing that I thought of is, okay, step out of the way then and let people who actually understand how to audit these things, like your prior guest Julio, who says, no, this is actually real. We'll stand behind the day that we did our audit. We need more of that in the space to get those institutional and sort of legacy investors back into it. Those people believe that, or they were told that blockchain can't have fraud. And what we now have is the biggest fraud in American history in the financial space that has nothing to do with blockchain.
Right. But nonetheless, it does soften the market, if you will, for the average retail investor who might not be familiar with how this, how things work, et cetera, and frankly might not care because they're in it for the quick gain and they're not particularly interested in the technology. Nonetheless, where is that softness that you talk about? How soft does it get? How soft does the price of Bitcoin? Do you see a bottom coming in? I mean, you say it's flatlined, but God knows we always say that, and then something else happens.
Well, I don't want to worry viewers, but quite frankly, my ultimate wish target for Bitcoin specifically is about 9,800. If we get to about 9,800, I'm backing up the truck, and that's where I'm buying things and never looking at them again. Doesn't mean I won't buy it at 13,000. I will. That's sort of my next downside target. If we get to about 13,250 is where I'm going to start accumulating again as opposed to trading. There was another article on CoinDesk about a potential death cross coming. Having, again, over 20 years in legacy markets, I'll relate it to stock markets. When you look all the way back to 1950, death crosses are not very reliable overall, but they're very reliable in the short term for two things: a sell-off for people who believe in death crosses, and then a rally back up to where that actual cross happened. In the case of Bitcoin, that would be upwards of 21,000. That wouldn't be a bad thing, again, for people to have a short-term tradability for Bitcoin. And when you bring up those retail investors, one of the reasons I believe Bitcoin is just sort of flattened out despite, again, what is likely to be the largest financial fraud in U.S. history is because the people that are left in the markets right now are the ones that believe in the technology, not the ones that are looking for that quick gain. If you're looking for that quick gain, I don't think this is a buy for you. And that's why I say right now it's tradable, but it's investable at this price and at lower prices if you're somebody who's going to put it away and not look at it for a while. This is the point where you take risk capital. And what's risk capital? It's capital that doesn't threaten your dinner tonight. It's capital that doesn't threaten your mortgage payment or your rent payment. That's what you want to start placing into Bitcoin and crypto right now.
What kind of headwinds and tailwinds are you particularly watching? Is it FTX? Is it Genesis, Binance, DCG, or, alternatively the Fed, the more macro environment?
Well, you just mentioned all the headwinds in what you said. Obviously, if there's any other sort of illegitimate institutions, so to speak, in the crypto space, there's a lot of pressure on Tether right now. It's above my pay grade to audit Tether. I can't audit Tether. But certainly I don't have confidence that their reserves are there. We need more people like your previous guest, I believe his name was Julio. We need more people like him to come out and tell us that, yes, this is there and maybe this is not there. Those are the kinds of people we need in the space. So headwinds, yes, potential further frauds, fear of potential further frauds. The Fed is a headwind for a store of value assets. If they're raising interest rates, that means you can get a higher return on treasuries that you can't potentially get in things like crypto and gold. Having said that, the more that they push us toward recession with inflation where it is now, okay, that's stagflation. I'll relate it again to traditional markets like the equity markets. Equities actually rally during recessions. They rally at about the beginning to the second half of the recession, and they continue to rally through the recession and on into the future past it. Bitcoin and gold would likely do the same thing if we had stagflation. Stagflation is a combination of a slow economy and inflation. If anybody believes that the Fed can get to their target of 2%, they should call me on a private line. I've got some FTX stock. I'd like to sell them. From a perspective of what's going on with the Fed right now, it's my opinion that whether they verbalize it or not, they're going to have to accept a higher inflation rate. And that, to me, is where you have things like Bitcoin that can actually gain value. That's a tailwind to me, and it's a big one.